Um, Hi. Wow, there's a lot more of you when I stand over here than when I was over there. I wanted to first start by just thanking Planet Finance for inviting me to speak today. I got a very simple brief. I got the chance to talk about just about anything, and the only thing I ever talk about is microfinance. So it fit really well. In order to tell you about it, I wanted to introduce you to somebody I know quite well. So this is Victoria, Victoria Obanye. Victoria is from a small town just outside Lagos in Nigeria. Victoria makes the finest plantain curries known for miles around. All of her family, all of her friends, everybody comes from miles around to come and eat her food. When she cooks, they know about it. For the last 10, 20 years, her children and her family have told her that she should start a business. She should start selling this stuff. If she sold it, people would come. She'd make millions. But she's quite worried. She's quite scared. She doesn't really have any money. Her husband doesn't work. Her kids aren't really very wealthy. They live in a rented place that they don't own. And she knows she could borrow some money. She knows she could borrow some money from someone that a friend of a friend has told her about. But it's not somebody that she either knows very well, she trusts, and she's also quite worried about how much they charge. She heard about a small organization from a friend of hers offering to help people start small businesses, giving them access to finance if they needed it, for fridges, washing machines, and others. And that's how we met. Not in Nigeria, nowhere near Lagos, but actually in Hackney, in London. The story to meet Victoria really started probably about 15 years ago. You see, my mother's from Bangladesh, and she came to the UK in the early 70s, just after the War of Independence. And like anyone who's come from another country into a new country, she tries to make sure that her children understand about the culture that she's left behind. So I spent a lot of my childhood basically going to movies that I didn't understand, being forced to listen to poetry that made absolutely no sense, and reading books that I couldn't really understand either. But at one point she took me to see a talk or a lecture by an economist, someone who'd come over from Bangladesh and was really just talking about finance. And he was talking about how he was using banking to empower women. And it was one of the most fascinating conversations I'd ever had with anyone when I was asking him questions about why he did it. And the thing that he said to me that really struck in my mind was that it's very easy to lend money to somebody with money. Why don't we lend some money to someone without any money? That surely is what banking should be about, getting it from the people who have some to the people who don't. And this really struck in my head, and the thing that I couldn't get out of my head was that I'm pretty sure this guy was absolutely bonkers. I'm pretty sure he was wrong. And in fact, I thought he was so wrong, I wrote him a letter. So this is long before emails and the internet really took off. So I wrote him a 2-page letter explaining how I thought he was wrong, how I thought he was losing money, and how I thought none of this was going to make any sense. And to my surprise, he wrote me a letter back and said, well, hey Faisal, if you're so smart, why don't you come out to Bangladesh and find out how wrong I am? And so I got on a plane, I went to Bangladesh, and he then won a Nobel Prize for being right, and I spent 2 years trying to figure out why I was wrong. That was Muhammad Yunus at the Grameen Bank. I spent the next 2 years of my life really working on microfinance, whether it was with the World Bank or with local microfinance organizations, trying to understand what was successful about lending small amounts of money to people that nobody else wanted to lend money to. And I suppose while I was there, I couldn't help but be struck by the similarities that I saw in all the villages that I worked in across South Asia of the issues that people were having accessing finance and the same issues that I experienced with my family when we were growing up in the United Kingdom. Now that might sound strange to you, because when you think about the UK, you don't think about exclusion. You don't think about people without bank accounts. In fact, you think the total opposite, right? You think of people with far too much credit. You think of people with too many credit cards, people who are over-indebted, people who really shouldn't have borrowed that amount of money. And for many, you're right. But actually, in the UK, there is a different group of people that maybe we don't really hear a lot about. And it's the same kind of people that we maybe hear a little bit about in our own countries. These are the 7 to 10 million people in the United Kingdom who currently don't use banks for their mainstream sources of credit and finance. We euphemistically call this the subprime market, and it has an evidence in every country that we think about where we have a formalized banking system. of these 7 to 10 million, about 3, 4, maybe 4 million people access their regular finance from a guy who comes to the door. Totally legally, completely legitimately. He will come to your house and offer you some money and make a collection every week. A couple of million people are using payday lenders, lenders who lend you very short-term amounts of cash for very, very high interest rates. And about 2 million people in the UK, out of the 60 in the country, don't have any access to banking at all. These are people who live in the full cash economy, unable to get into the banking system at all. And then finally, we've got a couple of 100,000 people in the UK for really, it doesn't actually matter what you charge them, because if you don't repay, they'll break your legs. And these are the illegal moneylenders who still prey on the estates in the UK at the moment. So just to give you an idea of what that really means, for some people, the terms credit crunch have just been a reality. And when they want to borrow finance from the doorstep lenders, these are the rates that they'll be borrowing from. This is a company that lends to 2 million people in the United Kingdom. It's worth £2 billion, has a return of equity of over 52%, and is listed on the stock exchange. This is a company that's based in East London, very close to where my office is. This is a guy who has 10,000 clients. Most of them are over the age of 60. He lends loans of £500 for funerals, for washing machines, for people moving into flats. The loans are about a year long, so that 1,000% really does mean 1,000%. This is a guy who's competing with him, but clearly not on price. This is the fastest growing part of the financial sector in the United Kingdom at the moment. Payday lending. Short-term finance, when you need it, around about 100, maybe up to £500, but in some cases a couple of thousand. And that's a real interest rate. This is the market leader. I'm not sure if you have these in France, but these are growing very fast in the UK, lots of parts of North America, and in many of the countries across Europe. Now, when you look at interest rates like this, you kind of think, what kind of idiot does that, right? Who's going to borrow at those kind of rates? You've either got to be extremely stupid or blind. And I think when I came back to the UK about 12 years ago to really try and understand what was going on here, I started to figure out that there was actually something totally different going on here. Yeah, people make the wrong decisions sometimes. They make bad choices. But actually, they're not stupid. And sometimes the choices that they make, we would never really understand unless we spent the time talking to them. I asked that question a lot. I spent a long time asking that question and trying to figure out what was going on. And I spoke to people for years, better part of 7 years, to really understand that before I thought I felt comfortable enough to launch something. One of the things that we've seen in the UK, and in many of the developed world, has been the rise of information. How we can use how information has allowed us to access so much more than we've ever accessed before. It's allowed banking to take data from just about anywhere to figure out who we are. It's allowed them to cross-purpose information, and it's allowed people to kind of really drop the cost of banking so that in the UK right now we have free banking. We have relatively cheap access to credit cards, the whole string of overdrafts, and inclusion is much greater now than it ever was. When my parents came to the UK, 30% of the country had a bank account. Right now, although 2 million is a large number, we still have 92% of the country banked. That's a big, big change from where it was. But one of the interesting things about information is that you have to have some data to be part of it. So in order to get onto the information system, the 3 things that you need are a passport, a driver's license, or a utility bill. That's a big challenge for people who've never left the country and don't have a passport. They've never learned to drive. They don't have a driver's license. And the bills aren't paid by them. They're paid by their husband, or they're paid by their landlord, or their partner, or some other person. It's difficult to get into the system. But even if they do get into the system, credit scoring is driven by a huge amount of data that really prioritizes things like home ownership, whether you're employed, and whether you've used credit before. So a real challenge here for people who either don't own their own homes, living in rented or social housing, people who are working part-time, unemployed or self-employed, or even people who borrowed from lenders that don't register your data on the data registers, the cash lenders that I've just talked about. But let's assume you can get through all of this. Let's assume that you can get through this kind of challenge of information, as many people have done. What I found really fascinating was that when you talk to people about what they want, often they don't want the same things that you would expect. If I think about what decisions I what decisions are important when I choose a financial product. Probably number one on that decision list will be something like price, how much it costs me, or what the return is, how much am I going to get for it. But over 5 years of reviews, analysis, consultations, and discussions, I really discovered a whole string of different type of things that I'm going to share with you. So the first two that I came across, which interested me, were number 1 and 2. For most of the people that use these lenders, the first thing they say is, I need to know that I can access a product, and I need to know that it's flexible. What does that mean? Well, access. Bank branch closures in the UK have become a regular sight. Many people in many communities don't think they can go to the banks and choose not to. So for them, it's not an accessible option. They don't want to and are unable to stand in queue to get access to these services that often they might have to travel 45 minutes on a bus to get. Flexibility. Well, most people on low incomes have non-standard incomes, chaotic incomes, you could say. They need to know that whoever's going to be lending them money will be as flexible as their income stream is. Can you imagine ringing your bank and asking them to hold a direct debit for a week because the state has decided to pay you 3 days later, or your employer has decided to pay you by check, or you've only managed to get 3 weeks' worth of work rather than a month's worth of work? That flexibility doesn't really work very well in our banking system. The other two that are really interesting are simplicity and honesty. Now, you might say, what on earth is simple about being charged 4,214%? Or what's honest about it? That's the kind of rate that you don't talk about. That's the kind of rate that you hide and you're not honest about. But for many people who are using these lenders, whether they're doorstep lenders or payday lenders, what they don't see is the rate. What they see is that a doorstep loan is £20 a week for 50 weeks for a £500 loan. A payday loan is £30 per 100 per month. It's really simple maths, it's really straightforward, it's really easy. And for most people, it's the kind of thing that they can really get their heads around and understand. In a way, what you've got here is quite a different way of thinking about products. But then when you get into the deep discussion about what is it that's really interesting you and keeping you here, you find that they say two things over and over and again: respect and relationships. Respect. The person who comes to your door is somebody you know. It's not a man with a baseball bat and a Rottweiler. It's probably a woman. It's probably a member of your community. It's probably someone who knows your name, someone who remembers your child's birthday, someone who knows who you are and what you're doing, someone who can relate to you and will make no judgments about whether you want to use that finance to go on holiday or start a business. Make no judgments about whether you can do it, but if you can repay them. And that level of building a respectful relationship with someone is quite fascinating to even consider that this is happening by people who can charge so much. As I understood this, it totally changed my conception of what was going on here. What you've got is quite an interesting mix of personalized, bespoke, relationship-based financial products, just the kind of stuff you see advertised on the TV every single day. And yet these people were getting it. I think what interested me about it when I thought about it was that there is another group in society who get products in exactly the same way. And that's the very rich. Personalized, bespoke, relationship-based products. The only difference is that for the very rich, they can afford it, and for the very poor, the cost is keeping them poor. What I found really fascinating about this, I suppose, after understanding this, is that if you think about what's going on here, you begin to see that some of these people are receiving a terrible service from the people that they should be getting cheaper products from, and they're being ignored by the mainstream institutions who are lacking in imagination to provide them with the right types of products that they can afford, and are uninterested in bringing their services to them in the way that they want. Ultimately, I think the poor here are suffering something else. They're suffering from a perception problem. The perception that you can't design anything affordably, use your brain and create something interesting that might actually work for them and might actually be useful for someone who needs products in different ways to the mainstream. And I suppose that's where I came up with the idea of creating fair finance, which goes back to that sense of what the origins of microfinance used to be. How can you create a high-touch service where you really engage with an individual to give them access to banking, to give them access to finance, to give them access to good advice they can trust, and to build relationships with them so that they know what to do and how to relate with you? I launched Fair Finance in 2005 with that express purpose of saying, how can we create something as good as a private bank, but for the people who don't have banking at all? And I've managed to prove it that it can be done successfully and sustainably in the right kind of way. using face-to-face contact to figure out who you are, using the smartest brain that exists to analyze whether you're going to repay it or not, and designing products based on need rather than expectation to really understand how we can get the right types of service out to people who need them. We've done this successfully and proved that it can be done sustainably. People come back, not because they have to, but because they want to. It's cheaper, it's smarter, it's faster, and it's better. And it's the kind of service that investors put money into, and lenders can invest into us as well. So, it's been quite a successful journey from 2005 to 2012, and in many ways we've managed to prove that this works. And the question you ask yourself sometimes is, well, why do you do it? Why are you doing something like this? Is it because you could? Maybe. Is it because there's something quite fun about turning the preconceived notions about credit scoring and risk on its head? I think definitely. I think definitely it's quite nice to be a disruptor in what's going on. I think it's quite nice to bring products and services to people that nobody cares about. Is it simply that there's an opportunity? Yeah, definitely. Is it because perhaps maybe only you can address this problem by mirroring two issues that are really close to your heart, the social and the business, in one place and make it work? Absolutely. But I think there's more than that. I think if I'm really honest with you, one of the things that's really fascinated me is not just simply what we've done, but I suppose what we could do with what we've got. I get to ask some interesting questions because I'm not a banker, I'm not a financier, I've got no finance training at all. And some of those interesting questions are often things like, if we had the chance to rebuild our financial system, do you think you'd really want it to look like this today? Do you think it would look like what we see around us and the chaos that we've seen in the markets that are all over the place? I don't think so. I think if we had the chance to start again, we'd start somewhere different. We might actually start with people and put people back into the center of that relationship. And I think that's what interests me. If I can find a way to put humanity back into banking, humanity back into finance, then maybe we might be able to create something new, something very, very unique that actually works in a way that current banking doesn't really care about, current finance isn't very interested in about. The kind of banking that maybe lots of us might be interested in. The kind of banking that maybe all of us would want to be part of, not just for the poor and excluded. I mean, if you think about it, wouldn't you like a personalized, bespoke financial product based around your needs rather than your similarity to somebody else? Wouldn't you like to know the person managing your finances? Wouldn't you care if you had a relationship with them or not? And I think if we can begin to prove that this works, maybe all of us might start demanding this of our banking institutions and our financiers. Maybe all of us might start saying, actually, you know what, there's a different way of doing this, and I've seen it work, and I want you to be part of this kind of business. And I think that's what drives me even more, because if we can make that kind of world become a reality, I think it will be much more inclusive and much more equitable, and the kind of place where a business like Mama's Kitchen can be created, and someone like Victoria Albanier can make possibly the finest plantain in all of London. Thank you.